CNE Online. I'm Andrew Robinson, for those of you who haven't met me before. I think everybody here I know for the most part. So today we are going to be holding the second in a series of virtual town hall meetings that are aimed at understanding the financial resources and relief available to nonprofits, and specifically the legislation coming from the federal government, known as the Payroll Protection Program, and the other one that I can't remember what it stands for, but the short form is EIDL. And luckily I'm not the content expert here. We have with us today Rahul Keshap of Shuru Law. He's a lawyer that works with nonprofits and a CNE board member, and Kadi Davis, our senior membership manager, who's been sort of the lead staff member at CNE, trying to get an understanding of this legislation and what it means for nonprofits and how folks can access those funds. I'm going to hand it over to Kadi and Rahul. If you have questions along the way, assuming that we keep in a small group like this, if you want to throw a hand up, or you can send a message to me or the group at large, and we can pause and answer those questions. And I'm also gonna, I think Kadi's gonna do a little bit of an introduction, and while she's doing that, I'm gonna get a poll together that just to ask some questions about where people are in terms of what they've experienced around the process, and so we can get an understanding of where the group at large is. So I'll hand it over to Kadi now.
All right, thanks, Andrew. I want to start by saying that if you've been feeling overwhelmed by all the information that's out there and having difficulty navigating it, we want to validate that at the forefront, because there is a lot out there and it's confusing and it's changing all the time. And even information we shared during last week's town hall has changed. So I want to just validate that if you're feeling like that. So our goal for today is to help cut through it, share what we've been learning from nonprofits, community partners, and another goal of ours is to learn from you so that we can incorporate that information, gather what we've missed, and share it with others. So as Andrew said, please share your experiences and send questions in using the chat box. I want to kick off by sharing the summary memo we've put together and briefly walk through the various sections, which are organized by relevant audience. It's available on our COVID-19 resource page, and we'll be sending you the link after the town hall, and we are updating the document all the time. So the majority of our time today will be spent here on this first section on operational expenses and paying employees, and the two major federal loan programs available to nonprofits under the recently passed economic stimulus package, the CARES Act. So those two programs are the Paycheck Protection Program and the Economic Injury Disaster Loans. We'll also cover a few other relevant provisions of the CARES Act, and then move on to the Families First Coronavirus Act, which is legislation that was passed before the CARES Act. Towards the end, we'll move on to sources of local funding and support for nonprofits and their clients. And I know that we have a handful of participants from outside the Charlottesville area. So towards the end, we'll touch on funding for communities in other parts of the state and opportunities more broadly throughout Virginia. And then at the end, we'll also touch briefly on information you can share with your donors or those who are interested in supporting nonprofits at this time. So with that, I will kick it over to Rahul to talk about the first of the two major loan programs, the Paycheck Protection Program.
Yeah, thanks very much, Kadi and Andrew. Good afternoon, everybody, and delighted to help out. As Kadi said, my name is Rahul Keshap. I work at Shuru Law. I'm really proud to serve on the board of the Center for Nonprofit Excellence. It's an organization that just does tremendous work here in the Charlottesville area and beyond, broader in most of Virginia nowadays. So I hope if this is the first you're hearing about the CNE, I hope you'll explore the resources that the CNE has to offer, because the staff have been working extremely hard over the last few weeks to make sure that nonprofits are served throughout this unbelievable period that we're all living through. And I'm certainly glad to do my part to help talk a little bit about the Paycheck Protection Program. And, you know, fortunately, I think today we have fewer numbers than were on the call last week. And so hopefully we can find ways to bring you all in as well and see how you all are doing in terms of reacting to the opportunities that are out there for some relief during the middle of all this. Andrew, can I call on you? Did you have a poll question or two to share before we jump in?
I can't get the poll functioning working, so I'm going to ask folks,
Okay.
if you haven't already done so, to open up the participants section so that you can see who names, and there should be there little green and red yes and no buttons. So I'm just going to do a real-time test here. So the first question we had was, you know, before today, how many of you had heard of the PPP or EIDL beforehand? So if you can click like, yes, I've heard of it before, or no, I've never heard of it before, and give us a sense of where you're all at around that. That would be great. So I'm seeing 4 yeses and a no. 5 yeses and a no. So it looks like most people have heard of that. And I'm just wondering then, I'm gonna clear those out, and I'm gonna ask another question, which is, have you applied to either of these or tried to apply to either of these programs?
Yes.
That'll be great. Yeah, it looks like, Andrew, if I'm seeing this correctly, we've got at least 3 folks who have gone through the 4 folks who've gone through the application program. Oh, good. A handful more than that, then maybe 6 or so. So that's fantastic. It gives me a sense of where everybody is. And, you know, it's hard to believe, but the CARES Act, which, you know, was really only passed by Congress and signed into law by the president on March 27th, is barely 2 weeks old. So, you know, for $2.2 trillion, it is understandably going to take a little bit of time for the processes and the regulations to really, you know, be fully understood. I think what Congress and the president were trying to do was essentially leverage some existing programs through the SBA, the Small Business Administration, that were already in place to try to help businesses, but you know, the pipeline has never been nearly as large as what's been set up by the CARES Act. So the first thing I'm going to talk about is the PPP, which is the Payroll Protection Program. And that is, you know, essentially $349 billion out of the $2.2 trillion that Congress had set aside. The idea is, you know, very much what it says in the title. It's intended to serve small businesses and help those small businesses essentially preserve their staff and their payroll during this time of uncertainty and social distancing and so on. So, you know, the intention is to cover businesses essentially that are 500 employees or fewer. If you happen to be on that borderline, there are some cases where even businesses with more than 500 employees may be eligible. But for the most part, I'm just going to assume that most of you all have 500 or fewer employees. And if that's the case, then you qualify for the the Payroll Protection Program as a nonprofit organization if you're a 501c3 nonprofit. So what that means is the charitable organizations that are the typical nonprofit are all going to qualify for the Payroll Protection Program. And, you know, so if you are a 501c6 or some other 501c organization, likely you will not qualify, but the 501c3s will, as well as 501c19s, which are veterans organizations. Assuming that you do fall into those numbers, then the Payroll Protection Program is intended essentially to provide a forgivable loan. So forgivable being a very good word in that scenario, meaning that you can qualify for essentially 8 to 10 weeks of payroll coverage for your organization as a 1% loan. What I mean by that is a 1% interest rate. But then even better news is that if you continue to hold your employee levels at the level that they were before the crisis, then you can essentially qualify to have the federal government forgive those loans. And that's really good news because then you wouldn't have to pay back any of the payroll protection loans. So just to use a very simple example, if in 2019 you go back and look at your average monthly payroll, and your average monthly payroll was $10,000, then, and we can get into that in a little bit, what exactly qualifies as payroll, then you would take that $10,000, which is your average monthly payroll, and multiply that by 2.5 times, and you would get to 25,000. And that is the amount of payroll protection program loans that you could qualify for. So as you can see, it's intended to cover 8 to 10 weeks of payroll based on your 2019 payroll. The important part of that is to make sure, one, that you are not laying off staff, because the way that you maintain the forgivable part of this is by maintaining your staff at least at 75% of the 2019 level. So even if you've laid off staff already because of the uncertainty or you were worried, you have until June to rehire staff and continue to preserve the forgivability of that loan. So it's important to, make sure that you are holding the line in terms of your staff levels if you want to qualify for the forgivable portion of that loan. And then you also need to make sure that 75% at least of that loan is used for payroll costs as opposed to other things. So what do payroll costs mean? It's pretty broad. So, this is all in the memo, and I will just advocate for you folks, really making sure you go to the CNE website and getting that memo because it's a fantastic roadmap. But the payroll costs really cover things that are straightforward, like employee salaries and wages, but it includes also commissions and tips. It includes sick leave and vacation, medical leave, those expenses as well. So it's pretty broad. It includes the taxes covered or paid for employee compensation. Beyond that, you can also use it for essentially non-payroll expenses, things like mortgage interest or rent or utilities. But as I said, if you use that for those other reasons, you really should make sure that you limit it to 25% or less of the loan proceeds, because that's what's going to keep the option to get the loan proceeds forgiven, is if you spend 75% on payroll expenses. The process for doing that right now is really working with an SBA lender, so a Small Business Administration lender. Right now, that basically means almost every bank in the country, as far as I've heard, credit unions and some non-financial institution lenders. I wouldn't worry about that too much. I think those are kind of Silicon Valley tech firms that are trying to get into the business of this. But think of this in terms of your neighborhood bank. Banks have been scrambling and working really hard. Most of the bankers I know have been working far beyond what we would call bankers' hours. In fact, I've been getting emails, well past midnight from a few of them, and I've just been getting a sense that they really have been doing everything they can to try to understand the details of how to get the money into the hands of small businesses. And so what that means is that they have been putting together portals if they are large institutions. They've been putting together loan application processes, and they've been figuring out exactly what the federal government needs to see. And what we understand is that the process is moving. So I know out of that 349 billion, at least 100 billion has been approved already. And I think some folks are starting to actually see money. Can I get a show of hands, perhaps? Have any folks who applied for the payroll protection program, have they gotten any news in terms of an approval? Well, let me stop there. Just say, has anyone gotten anything from a bank or from the SBA indicating approval? That's great news. Okay, so at least one of you. And if you don't mind my following up, sir, have you gotten funding or just the approval?
We just received news of the approval. We haven't gotten the funding.
Okay, thank you for that. Well, nonetheless, I think that's proof that the process is moving. And, I think the intention is to try to keep it moving as quickly as possible so that, businesses that are understandably very worried and feeling pressure are able to continue covering payroll. So I think you're going to hear more and more of those stories as time passes of the federal government, the SBA, and the banks really, starting to fund things. There was a tremendous amount of confusion earlier, but now I think things are starting to get a little bit better and a little bit more clear. So at a high level, I think that's the payroll protection program. Katie, maybe I'll turn it back over to you. And I'm not sure how we want to take questions, if we want to do questions now or if we want to continue on with the EIDL loans.
I have a question specifically about the PPP, if you don't mind.
Absolutely.
So Anna from CIC is asking whether there's a timeline for the payback of the PPP loan. So I think, and Anna, jump in here to clarify, but as I understand the question, it's asking like, how long are you on the hook for making payments on that before you know whether or not it's going to be forgiven?
Okay, good question. So I'll tell you a little bit more about what I know, although I do think that there are lots of details here, and Katie, if you can layer on. As I understand it, as I said, it's going to be a 1% interest rate loan, and payments will be deferred for 6 months at least. And so let's say that you get your loan approved and funded tomorrow. You wouldn't have to begin making payments for at least 6 months. So that would put you into October of this year. Interest will start to accrue, even though that 1% interest rate is incredibly favorable. The interest is still running on that. And the expectation is that the payback would be within 2 years. So that, you can essentially think of it as a 2-year loan. That said, the forgiveness process, and I can't remember if we know details of that yet. As far as I understand it, we have the criteria for payback in terms of the numbers you need to maintain the payroll and the expenditures, but I have not seen the timing in terms of when the forgiveness is going to be processed. Certainly, I know there are some June deadlines and times that you need to essentially maintain payroll through. So I'm guessing that the forgiveness process cannot even begin until June or July. Katie, do you have anything more on that?
Yeah, it's my understanding that if you receive the loan, you should, of course, keep good records of the expenses to make sure you're complying with the loan requirements. And after 8 weeks, you would apply with your lender bank for loan forgiveness.
Good, thank you for that. So again, I think really important to look carefully at the forgiveness aspects of that, but the entire idea of the Paycheck Protection Program is for the federal government to step in and help you as a small business leader or owner to maintain, the staff so that the country is not laying off as many folks. Although, of course, we've all seen news stories about how many millions are being laid off, but I think they are using the CARES Act to do what they can to limit those numbers. So, Andrew, did you see other questions, or do folks want to, really just raise their hands if they have questions around the Paycheck Protection Program?
I did have one more here, and it's a question that we've seen in the last session, so I imagine it's on a lot of people's minds. So it's this question about whether or not you have to hire the exact same people back, or whether you just need that many hours, and whether what that means in terms of positions as well.
Yeah, good question. And so the answer that we understand is that if you simply maintain the same level of payroll, then that will qualify for you in terms of number of staff and also the amount that you're spending. So keep the amount that you're spending at least at that 75% level, and keep the same numbers of staff. If you need to make a change, or for whatever reason there is a change in the identities of the people that your employee, that is not material, and that's not going to make a difference. So good news there in terms of being able to manage the people who are on staff. It's really the federal government trying to make sure that you maintain the level of employment. What I will also say is that we are working closely as well with the Small Business Development Center here in Charlottesville. So I will direct you to the Central Virginia Small Business Development Center as well. I know that Rebecca Haydock, in her role as the leader there, has been working with her team, and they've been providing actually one-on-one counseling sessions with folks. And so if you have specific questions, I think they're a great resource to consider. As I said, it's the Central Virginia Small Business Development Center. I believe their website is CV for Central Virginia, SBDC.com. Any other questions before we switch over to the EIDL loans and advances?
There are a couple more.
Okay.
So there's a question. So I think one question I had there was when you say the same number of positions, is that FTE? Is that the best way to think about that?
I think that's right. I mean, we're not getting too technical here on the call, but FTE, if you're familiar with that, is kind of a full-time equivalency. So you don't have to think about it in terms of, whole people. But if you have, two half-time staff members, they would together add up to a full FTE. But that's right. So what you should assume is, let's say you had 10 people on staff going into this. Then you would want to maintain 10 people or 10 full-time equivalents through the process in order to maintain the opportunity to get the loan forgiven.
And that the PPP, right, applies to full-time and part-time, but not independent contractors.
Yeah, that's right, Katie. Thanks for that clarification. So if you all are spending operating expenses on independent contractors, those would not be considered part of the payroll that you're considering for the PPP. The idea being that those independent contractors or self-employed folks would be able to apply for the PPP in their own name. And so as an employer, you should be focusing on the folks that are your employees, not independent contractors.
And another clarifying question, does it make a difference if the employee, so if you lay off or furlough an employee versus an employee leaving voluntarily during that time?
Yeah, so I have not seen any distinction there. So I think you should treat an employee leaving during this time as a full-time equivalent that needs to be replaced. And so if you do have somebody voluntarily leave and you want to maintain the forgiveness aspect of this, you want to make sure you get back to the original numbers so that you can still qualify for forgiveness there.
And then I had one more question here that wasn't quite clear to me. So I'm just wondering if anybody else has a question, they could unmute themselves and go ahead and ask that.
Okay. Well, we can always return back to, oh, I'm sorry. Go ahead. Did you have a question?
I did. I wanted to know how this pertains to small businesses as well.
Yeah, so this payroll protection program is intended for really all kinds of businesses with fewer than 500 employees. So whether that's a for-profit business or a nonprofit, as long as that nonprofit is a 501c3. So there are some nonprofits that are not going to qualify under this. But if you're a for-profit small business, this is absolutely something that you could take advantage of. All the way down to sole proprietors, folks who don't employ anybody but themselves. They should also be able to take advantage of the payroll protection program. So you don't have to have a formal employee even, as long as you are a small business with fewer than 500 employees.
They're just not eligible for the loan forgiveness.
No, they would be eligible for the loan forgiveness. That's right.
The small businesses. Oh, okay.
Yep. So that, yeah, actually nonprofits, we'll get into the EIDL loans in a second. There is a little bit different treatment there between nonprofits and for-profits. But for the payroll protection program, nonprofits and for-profits that qualify are really in the same boat in terms of being able to qualify for the loan and for the forgiveness. Yep.
Okay, good.
Thanks, Rahul.
Yeah,
Katie, do you want to take over?
Yeah, and could I ask a quick question of the group? Is anyone still looking for a participating lender who would like to apply? Because I know that was a popular question last week. No. Okay, great. All right, so I will move on to the economic injury disaster loans and calling them EIDLs for short. So the CARES Act put more money into this already existing program. So for example, it existed under Hurricane Katrina, so nonprofits could receive disaster funding. So this has already existed, but the CARES Act put more money into it, expanded eligibility for the loans, and waived certain requirements that previously existed. So under the EIDLs, eligibility is more broad. It's available to all 501Cs, Ds, and Es, including faith-based organizations in operation prior to January 31st. As of a few weeks ago, the SBA was encouraging people to call to determine eligibility. You don't need to do that. The covered uses can be used for, and again, this is, there's a broader array of uses under the EIDL, including payroll, sick leave, fixed debts, accounts payable, rent or mortgage payments, and other bills that can't be paid because of COVID's impact. The terms, they are at a low interest rate of 2.75% for nonprofits, but unlike the PPP, it is a loan that must be paid back. And payments are deferred for 1 year. Some of the terms around the loans, they can be up, previously they were up to 2 million with a 30-year maturity, but as of late last week, it's limited to 15,000 of the 2 million at this time. I don't think that's a max, but that's what they're limiting it to for now. And it's limited to 2 months of operating expenses. A key thing when applying for the EIDL, you can ask to be considered for they call in the CARES Act an emergency grant. The SBA prefers the term advance, but I'm just going to say emergency grant for clarification. So you can be asked, asked to be considered for up to 10,000, and that is money that does not have to be paid back even if your application is later denied. A key thing there is that the 10,000 is prorated based on number of employees. So if you have 1 employee, you can be eligible for up to 1,000. And we're hearing that it will take at least 3 weeks to disperse those funds. The SBA was initially saying 3 days. So if you already applied for an EIDL loan, you can go back and fill out, there was a new streamlined application that was released maybe about a week and a half or so ago. So you can go back and request the emergency grant if you didn't already, and it won't slow the status of your application. If you receive both a PPP and the emergency grant, the 10,000 emergency grant, say you get it, will be subtracted from the PPP loan forgiveness. We're hearing that the streamlined application shouldn't take long to complete. We're hearing a little over 20 minutes. And the difference with the EIDL loan is you apply straight through the SBA website. And in the summary memo, you can find a link to the application as well as a PDF to view the application questions ahead of time so you can get your documents ready. And if you've already applied and you're wondering on the status of your application, we have a phone number you can call to check in on that. And I will pause there and see if there are any questions about the EIDLs before we talk about comparisons between the PPP and the EIDLs.
So I have a question. We applied on the federal website, the streamlined application. We got our confirmation number. I think I'm still a little confused about whether or not we had to go through a bank to do this. We were still able to put our application online and get the confirmation. But when I had spoken with Virginia National Bank, they told me that they weren't accepting or they weren't reviewing any more applications at the time because they had received so many, but I was still able to apply online. So I think we're a little confused of what that means for us. Does that make sense?
Yeah, and Kristen, just so I'm clear, you applied for the PPP through Virginia National Bank?
No, we applied for the EIDL loan on the website, the federal website.
Through the SBA website?
Through the SBA.
Okay. Okay, let me see. Ryan, do you have information having applied of kind of how it's working with the bank?
I I can only speak from the CNE experience. So like you, Kristen, I applied directly through the SBA website. As far as I can tell, it had no link whatsoever to our banking relationship with Atlantic Union, who is the lender that we submitted our PPP application to. So I don't think in any way the SBA is even notifying your banking institution that you've submitted that application. The only link is that you're required to include the account and routing numbers in the application itself.
All right, if there aren't any more questions about the EIDL, we can move on to comparisons between the two programs. So you can apply for both the EIDL and the PPP, but you can't double dip, meaning you can't use both the EIDL and PPP funds for the same expense. A question that's been coming up is whether you can have an operating reserve and still apply for the funds. And it's our understanding you can, as long as you can make a good faith certification that you have suffered economic injury due to what's happening. So if you're planning to pay and retain your staff, the PPP is the better option, because if conditions are met, the loan is forgivable and turned into a grant, as opposed to the EIDL, which must be paid back. And it does have a lower interest rate of 1% compared to that 2.75%. But we don't see any downside or reason not to apply for the EIDL and request the emergency grant if you have staff as part of the process. And you always have the option to decline the EIDL later. So I think in the previous section, we talked a little about this, but if you receive a PPP or refinance a portion of your EIDL into a PPP, any amount received from the emergency grant will be subtracted from the forgivable amount of the PPP. So I think I'll pause there with the comparisons.
There was a question last time, or a point that came up last time. I think people were using the term grant, and I was curious, in both of those cases, PPP and EIDL, are we talking about grants, or are we talking about applying for a loan and then applying to have that loan forgiven?
I can jump in on that one. So for the PPP, it's definitely a loan that can be forgiven. So, you know, hopefully you can meet the parameters for forgiveness, but it's a loan up until the point when you qualify for forgiveness. For the EIDL, my understanding is that essentially you apply for the loan, and in the process you can also ask for the advance. But the interesting thing about the advance is that it doesn't have to be repaid. And so it's actually, you know, being kind of used interchangeably in terms of an advance or a grant. Normally you would think of an advance as something that is just getting to you earlier, but still is kind of being treated in the same way. But in this case, it's getting to you earlier, and it's different because it doesn't have to be repaid. So, you know, I'm not sure if there's any sensitivity around the terminology, but I'm absolutely with Katie. I'm thinking of these as grants because they are, you know, clear. The SBA is clear that the advance, if offered, does not have to be repaid, and that certainly seems like a grant to me.
Thanks.
All right, sounds good. Unless there are any questions, I'm going to jump to other relevant provisions for nonprofits under the CARES Act. There are two I want to highlight. The key with these is that these don't apply if you receive a PPP. So if you don't receive the PPP, you would be eligible for both of these. The first one is that employers can delay the payment of payroll taxes for 2020, 50% due at the end of next year, and then 50% due at the end of 2020. The other provision is that the Act creates an employee retention tax credit. So that's a refundable payroll tax credit to employers who retain their employees. Eligibility is 501Cs who have been partially or fully shut down due to a government order. So that would apply to just about all nonprofits. The terms of that is that employers can take a credit in the amount of 50% of up to 10,000 of an employee's qualifying wages. So that would be up to 5,000 is the maximum credit for each employee through the end of 2020. So advance payment of those credits are allowed, and they're fully refundable if the credit is more than certain federal employment taxes. But again, with those, if you receive a PPP, you wouldn't be eligible for either of those. Are there any questions about those two before we go on? Okay. The act also, oh, Kristen, yeah.
My question is, again, is there a percentage of employees or payroll that you have to keep to be eligible for these?
My understanding is for the employee retention tax credit that there's, it's not related to how many employees you retain. It's more allowing you a credit per employee. Okay. But under the Paycheck Protection Program, the loan, it'll be, forgiveness is based on meeting that condition, those three conditions of, so the amount forgiven may be reduced if you reduce the number of employees, if you use more than 75% towards non-payroll expenses, or you decrease any employee's wages by more than 25%.
Katie, can I jump in? I think
Yeah.
I got a written question from another participant asking, can payroll protection program funds be used to pay retention or hardship bonuses to employees? They're saying their info was from their CPA firm saying initially yes, but they were pending SBA guidance. My feeling and my read of this is the same way, that retention or hardship bonuses would still qualify as payroll expenses. And so, even though they are unusual this year in that, they weren't being paid last year, they still fall under the category of payroll expenses. And so, I think your CPA firm is probably being properly cautious in saying that they, are pending SBA guidance, but the plain language, certainly suggests that whatever kinds of payroll expenses you put forward this year would qualify as an appropriate and forgivable use of payroll funds from the Payroll Protection Program.
Thanks, Rahul. And Kristen, did that answer your question? Yeah, okay. The last, the last thing I'll highlight under the CARES Act is that it provides funding for government programs, so things like SNAP and Head Start. It also provided funding for the National Endowment for the Arts and the Humanities, and we just found out today that Virginia Humanities will be distributing more than $500,000 in aid to museums, historic sites, libraries, and humanities and cultural nonprofits across Virginia, and the application process for that opens April 20th. So they've been kind of put in charge of helping to distribute those CARES Act funds for the National Endowment for the Humanities. And as just kind of a last note, as we're talking about funding, that you can always contact your vendors, landlords, accounts payable to try and negotiate payments. But I will pause there, and Rahul, turn it over to you for the Families First.
Yeah, thanks. And again, as always, if you have questions, we'll be glad to answer them. So please continue to send those through the group chat, or submit them to Andrew so he can pass it along. But before the CARES Act, which is the $2.2 trillion stimulus bill, about a week to 10 days before that, Congress passed and the President enacted the Families First Coronavirus Response Act. And, that act is a little bit different in that it was focused very directly on the coronavirus rather than the economic impact. But there are some things in there that small businesses should pay attention to. What it really does is it creates for 2020. So this is, a temporary bill in some ways, but it creates a new right for employees of small businesses, and the small business in question is those with fewer than 500 employees, But employees that are being impacted by the coronavirus outbreak in terms of either needing to take sick leave or to take time off emergency family and medical leave in order to care for others are going to be eligible for paid sick leave and paid time off in a way that previously they weren't. So again, keep in mind, this is really only in effect from April of this year through the remainder of 2020, but you do have a responsibility as an employer to notify your employees about the new rights. And the good news is, so the benefits that employees get are actually now going to be covered during this stage by the federal government in the form of payroll tax credits or holdbacks. And so, you know, if, for example, an employee ends up taking 2 weeks of emergency paid sick leave, which previously, you know, there was no right to paid sick leave under the law, the employee would now have a right to up to $511 per day if they're taking time off for their own need, depending on their salary. So if they were eligible for, you know, for up to $511 in salary, then they would get that. And then to care for others, they could get essentially 2/3 of their salary with a max of $200 per day. But the good news there is that once you as an employer pay that, you can then turn back around and get that funding back from the federal government. So some benefits there. There is in the memo that Katie shared a great poster from the Department of Labor that you should share with your employees electronically. You don't have to post it physically until you guys are all back to work. But share this, you know, electronically with your employees. And I'm going to, unless I mess this up, send you the link now in the chat. It's a good summary of essentially what the law's requirements are, and it's also a good notification for your employees. So send that to them, and you know, if you have questions along the way, happy to try to answer some more of those. But the idea is emergency sick leave and emergency family medical leave to deal with the coronavirus during 2020, and then the expenses there that employers have to pay can be in turn reimbursed by the federal government. Are there questions there that I can answer?
Rahul, and it's the case, right? If you receive a PPP loan, that you can't use that for sick leave or family leave wages under the Families First. So that goes to the no double dipping.
Absolutely right, Katie. I think that's a good rule for everyone just to remember, which is that there are going to be some overlaps across these laws. And, you know, it's just important to make sure that you never try to get loans or reimbursements for multiple versions of the same expense. So, you know, if you're using payroll expenses, you know, get that from the PPP and use the EIDL loan or advance for broader things that relate to operating expenses. And similarly, if you have to you know, expend money for the Families First Coronavirus Response Act, get the money under that act and don't use that as qualifying payroll expenses under the PPP. Never a good idea to seek government reimbursement for 2 copies of the same expense. Okay. Well, again, other questions, feel free to send those along. Happy to try to speak to them. And I know, you know, we're always around during the week. In fact, we're going to be doing multiple repeats of this same presentation next week. So your questions will help us kind of improve as we go. So I know we're eager to hear from you all, you know, whether that's now or later with your questions so that we can kind of anticipate what people next week will want. Katie, back to you.
All right, thanks, Rahul. So it looks like we have 15 minutes left. So I'm going to spend the next maybe 5 minutes or so talking about resources available to nonprofits in the Charlottesville area and resources for clients you're serving, and then touch on funding and support for nonprofits and other communities we work with around the state. So if you're a nonprofit in Charlottesville looking for local funding and support, CACF is prioritizing grants to households experiencing hardship and nonprofits providing basic assistance, including food, housing, and medical supplies. So if you fall into one of those categories, we have the contact information for Ebony Bug in our summary memo. Nonprofits who have emergency relief funds can also post those to the Support CVille website. We found it to be very comprehensive and up to date. Nonprofits can also post requests for volunteers, supplies, and post ways to help people access your services. And there's a form on their website where you can request to be added. As far as finding grants, during COVID, the foundation directory online, which is normally only available in CNE's physical office, is available online. So you can contact my colleague Ian, and his email is in the summary memo for remote access. And then Rahul shared this great resource. It offers peer-to-peer support in navigating the CARES Act through the Charlottesville Business Innovation Council. So it's free to join their online discussion group and kind of bounce questions off that group. And again, we're available as well. So if you are looking for assistance for clients you're serving, the Community Resources Hotline is a great resource. It's city vetted resources for housing, money, food, and other supplies. You can give them a call and they can help you navigate what's out there. Again, CACF is prioritizing funds to households experiencing hardship. So if you're working with people in Charlottesville, Albemarle, Buckingham, Fluvanna, Greene, Louisa, Nelson, and Orange, households in those counties are all eligible. The Community Health and Wellness Coalition's website provides great mental health services and resources in the area. Ready Kids has put together resources for families and parents. We have contact information for those looking for emergency childcare, and they can help you navigate that. I've signed up for the CVille Community Cares and Charlottesville Clergy Collective newsletters, and links are in our summary memo, and found their newsletters to be helpful with opportunities in the area. We've also heard from nonprofits that they've found value in going to the Mutual Aid Infrastructure Charlottesville Facebook group. It's where locals can request resources and support. There's also the Virginia Coalition for Immigrant Rights. So if you're working with immigrant populations, they've collected resources. And I just want to touch on a few other provisions under the CARES and Families First Acts that could affect clients you're working with. There's pandemic unemployment assistance. So that provides unemployment eligibility to an expanded class of workers, including temporary workers. It adds an additional $600 to weekly unemployment benefits for claims effective March 29th until July 31st, and removes the 1-week waiting period. We have resources on how individuals can get that unemployment, skip loan payments, and more. Student loans, interest rate drops to 0%, and no payments are needed between March 13th and September 30th. And there's nothing you need to do to make that happen. And then, of course, there are direct payments to individuals. I think I'll pause there and see if there are any questions before we talk about funding throughout the state. Okay. So as far as funding and support for nonprofits located in other communities in Virginia or available more broadly throughout the state, we mentioned the Virginia Humanities Grants if your focus is the humanities or arts and culture. The Virginia Department of Emergency Management is reimbursing for Category B emergency protective measures, and we're learning more about that. I just found out about it yesterday, but it looks like you have to own or operate an eligible facility, but it is open to nonprofits. And in our summary memo, we link to different United Way websites throughout the state who have organized funds, as well as funds for organizations located or serving individuals in Madison, Culpeper, Fauquier, and Rappahannock, Stanton, Waynesboro, the Community Foundation for Greater Richmond. So I know we have folks throughout the state, so those resources are available in our memo. And if you're working with donors and and you want to provide information to them, the CARES Act does include a new above the line deduction for total charitable contributions of up to $300. So there's more information that relates to donors in our summary memo as well. Good. Andrew, did you receive any questions or?
I haven't had any more other than somebody asking if there was going to be a video of this available, and we are making a recording. So if you wanted to share this with other folks in your organization, we'll have that around. Probably not until sometime tomorrow, but shortly.
I'll just maybe end by repeating something that Katie said at the start here, which is that, you know, our intention here is to help guide you through the process. And so, you know, we completely understand how overwhelming it's been to hear about these new government, you know, funding opportunities and all the different things that are out there, the private opportunities and so on. And so, you know, it can be just completely crushing to have to wade through all of them. And at a very high level, you know, I think there are two government funding the PPP, the Payroll Protection Program, and then separately the EIDL loans and grants that are focused not as squarely on payroll, but more broadly on operating expenses. And so if you are a nonprofit 501c3 that's under pressure financially, you know, then focus your efforts on making those applications. And then also start to look more broadly, as I said, go through that memo that Katie has up on the CNE website, and, you know, just take your time and look through all of the various things as you're able to identify what might be a good fit with the needs of your organization. If you need help along the way, I think the Small Business Development Center is a great option to help you wade through and really counsel you specifically on what your business might be facing. But also reach out to, you know, any of us, because we've been in the weeds of these details for the last couple of weeks now, and we might be able to help guide you rather than you feeling like you can't, you know, sort out the different ways forward. So it's a pleasure to offer you this information, and do feel free to reach out afterward if we can help further.
And I'll throw that a link to that document that we've referenced there in the chat in case you haven't seen it. Any other questions before we sign off? All right. Well, thanks everybody for coming. Hope that was helpful. And oh, Katie has something she wants to add.
Yeah, and I just wanted to highlight that we do have, if you go to our COVID-19 page, upcoming trainings are free and open to any nonprofit. If you're a CNE member of Spaces Limited, you will be given priority. But so we've been talking about federal, state, local funding. We didn't even touch on things like fundraising during COVID. So we have an upcoming fundraising session. Andrew, that's next week.
Yes.
That's
So this Wednesday we have a session sort of on self-care and taking care of your brain during this time of stress. On Friday the 17th, we have Christine Nardi and Cindy Colson talking about the role of boards during a crisis. So that might be of interest to you or someone you know. And then the following week on April 23rd, we have a session on fundraising in uncertain times. And that's specifically going to be looking, I think, at donor relationships more than the event side of things. But if you do have questions about the event side of things, please reach out to me and let me know, and I'll see what I can do to help you out there as well.
Yeah. Thanks, Andrew. I really encourage you to visit that page because there are new offerings on financial forecasting tools, and within the memo, there are resources on contingency planning. So yeah, check out that page, and thank you all so much.